Here's another one. Here's another day in which over 150 million shares were traded on one day. So it appears, I mean, people, in order to get that kind of volume in a stock trading in a single day, you're talking about significant amount of money. I mean, think about it. 150 million shares. At this time, the stock was around $19 or $20. Just do the multiplication. $19 times 150 million shares. That's a lot of money that went into that stock on that particular day. And when you start to see that, when you see prices start to drop on lower volume, and you've got higher volume on these up days in which you've got a black volume bar here and an up day for the day, it shows a certain amount of support for the stock. I'm sorry, these are weekly bars, so that's the amount of money going into the stock on a weekly basis. Let's take a look at a daily chart here for a second. You can see significant amount of volume coming into the stock, but it did not fall in price. And then you want to kind of take a look at some of these bars, these black bars. There are a few significant ones here. Yes, there was also red bars, but for the most part, here's a significant black bar. There's a couple small bars here. There's a big bar here compared to the days previous to it. Here's some more big bars. There's 3 in a row in which there was increasing volume. Here's another big black bar here. There's another black bar here that is more significant and higher in volume than a lot of the red bars before it. There's another one here. So, and then when we had this more recent sell-off back down to from 1850 down to 1775, you can see that the volume had decreased significantly. And that usually means that there's not really too many sellers here in the market at these price levels. And it's, potentially we could have much higher prices in the stock just based on that volume analysis. So, this stock has been in a downtrend now for some time, and I've got it tracked by this channel, this one particular channel. This is a little sideways channel that I had in there for a while. But if you just follow this downtrend channel, you can see that it still hasn't made much progress moving up. And so it could move up higher, or it could consolidate here before moving up higher, but at least there appears to be some support of the stock through these higher volume on the up days in the stock as it continues to kind of move in the sideways pattern here. So it's something that you might want to keep an eye on. I mean, I'm not recommending that you buy Starbucks stock at all, but it is something that is significant to keep an eye on. This idea of determining both price and volume to determine when to take action on a stock in a way that I talk about again in Module 11. So that is pretty much it for technical analysis. You want to keep an eye on the general economy to see when, what particular type of stocks are going to be the next hot sector. Right now, institutional investors are getting out of oil stocks. What are they going to get into next? We don't know. But that is exactly the reason why you have ups and downs in the market. Institutional investors, big money managers are selling stocks that they no longer want in their portfolio. Then they start buying other stocks. They start buying other sectors. And in order for us to be successful in the market, we have to understand why these fluctuations take place. It's not because somebody just decided to wake up one day and sell stocks. It's because mutual funds are in there selling the stocks they don't want in their portfolio anymore and then buying stocks that they do want in their portfolio. And when that happens, we get the cyclical nature of the stocks going up and down. based on the buying and selling activities of large mutual funds. So that's it for this section on technical analysis. We covered long-term trends, cycles and sectors, channels, resistance and support points. In the next section on technical analysis and the big picture, we're going to talk about intraday charts. We're also going to talk a little bit more about volume decline and price action. We're going to talk about candlesticks, and then I'm going to talk to you about how to put it all together in a trading plan so that you understand when, in fact, you should be putting on your positions and how you should be putting your positions on. As far as delta, either plus or neutral or delta or neutral on our positions, you can see that if you're in a position where you're hitting a resistance point like this, you may want to be delta negative on this. If you're in the middle of the trading range and this is the time you should be putting on your positions, you're best off being delta neutral. If you're down on these levels and you believe that there's going to be a significant bounce in the market back to the upside, then you might want to be delta positive, at least slightly. So this becomes a little bit more intricate than simply buying and selling positions. Instead of simply putting on positions that we've talked about, such as calendars and iron condors and double calendars and so forth, if you have a little bit of technical analysis knowledge, then you can begin to put the odds dramatically in your favor. I'm not saying it's absolutely necessary, because the techniques that we talked about as far as double calendars and iron condors and building your portfolio will not change. The only difference is you may want to keep an eye on support and resistance points just to give you that little bit of an extra edge. Alright, that's it for today, guys. We're going to be talking about some really interesting things in the next technical analysis video. So stay tuned and trade with confidence.